Mickey, let me cut to the chase. With great respect for the heritage of the shadow FOMC cabinet and, of course, the heritage of the late Marvin Goodfriend, should we fear inflation with this debt buildup?
Not right now. And my clear answer is yes, the Fed is pumping in huge amounts of what we call high-powered money, reserves plus currency. But until that money's put to work in the economy, until you see an acceleration, the answer is no. So actually, Tom, in the near term, because you actually have nominal GDP with current dollar spending declining, you're going to have about a deflation in the near term.
Right. Mickey, if the solution is a massive multi-trillion-dollar income supplement during what is a fixed pandemic crisis, is the solution down the road to monetize all that debt buildup out into long-term bonds and basically pay off the pandemic over, say, 50 years?
No, that's not the proper approach. Clearly, this fiscal package, I don't think of it as stimulus. I think of it as income support when the bottle's falling out of aggregate demand. It has to be unwound. Now, the critical question is, do we pay for this? And the answer is absolutely. You're going to pay either in the form of higher taxes, lower government services, and even if it doesn't show up as higher inflation or higher interest rates, we pay for this one way or the other. But the answer is not to just, monetize it. Once again, it's not going to show up in inflation until we get all that high-powered money put to work in the economy. And when we do start to see an acceleration, that's when we have to be careful. But right now, the whole focus is on income support and getting us through this acute stage of the pandemic.
But, Mickey, would everyone pay for it? There wouldn't be some kind of worldwide, debt relief like we saw in times of war, because what we're dealing with is quite warlike, right? A lot of heads of state have been talking about this kind of invisible war we're fighting.
Well, Francine, when I say we're going to pay for it, what I mean by that is, you can't just have a huge decline in global economic output, provide support through increase, through deficit spending in various nations and higher debt, and not have it be costly. So one way or another, you pay for it either in terms of lower potential growth going forward, higher taxes, lower government services. But one point you made is interesting. In a sense, this is like a war, but it's really a negative supply and demand shock. A real war, like World War I, World War II, you actually destroyed capital. So there was tremendous capital building after that actually added to economic growth afterwards. Following historic pandemics, you don't have that capital spend build, and it takes a while for the economy to come back, for consumers to get their legs under them and feel confident enough to spend. I wouldn't be surprised over the next year, even after we come out of this big stage, if consumers are cautious, save a little or spend a little less.